Today's cherry bomb trade is a short call vertical in the Qs. And the Qs have a strong positive correlation with the S&P market. It has an IV rank of 30 right now. And today's strategy is a 70% probability of profit with a better than 80% P50. So if that sounds like a trade you might be interested in trying to build or put into your simulated or real portfolio, stay tuned because we're going to hop right in and get that going. Hi theorists, Neil here again with Option Theory. Welcome back, or welcome, and if you're new, right? Welcome to all. So my name is Neil, of course, and it is July 24th, 2020. And we are, of course, practicing and learning inside of ThinkOrSwim here, where we have our paper or simulated trading account. So if this is new to you, then head on to that description down below. You'll find a link to go get the emails from Tasty Trade. It's going to be a sign up page for their email list that you'll get taken to. I don't get anything from Tasty Trade. I'm not compensated in any way. They just produce great content, and I wanted to, make a channel where you get to work with me and build stuff and see if you can do these things. All right. With that said, the last thing I want to say actually is, if this is 100% new to you and you just stumbled upon this, I have a playlist. I like to put it up in the card above. It's a short playlist, getting started trading inside of ThinkOrSwim, so that you don't feel like you're just, all right, well, I now know I know how to trade the Qs today. What about in general, right? So at that point, we're going to move on and we're going to build this trade here. So we're in the Qs, and you can see it's been on a relatively long, since the end of March, recovery period here, and then some, right? Today's cherry bomb does talk about how, though, we're starting to see a pullback here. So whether or not you're a technical analyst or whatever, I have a few things up on the screen here. You could say that it hit this outer band. Excuse me. I'm one of those guys that don't edit my videos, so I'm leaving that in there. It's real. It's raw. Okay, so it hit the outer bands and it's coming back towards the mean. Pretty much hit the mean right there. You could say that's a bearish signal, right? You could even say here down here that this is a crossover. I don't put too much faith in it, but I am playing with those technical indicators, see if they help improve our odds. But this is where we put on cherry bomb trades, and for the most part, we put them on exactly as we receive them. Though today, I'm going to give you an alternative when we get to that. So I'm sort of blah blah right now, but I want to get going. Over to this Analyze tab, hit there, and go to the Add Simulated Trade. You want to type in QQQ for your ticker, and over here in the options chain, we're going to be again in the August 28th. That was wrong. August 28th weeklies is where we want to be. So that's at 35 days to expiration as of today, the 24th of July. And I have all of my strikes shown, but yours number may be different. Up to you. We're going to be on the call side. This is going to be a short call spread. So we're going to collect a credit, which means our odds are going to be in our favor, right? And we can be profitable in 3 out of 4 ways with this kind of a trade. So we're going to scroll on down here. The email says to sell the 270 and to buy the 272. So I've become a new fan of doing the clicks rather than right clicking. But in yesterday's video, I showed the difference between control clicking and right clicking. So I'm going to left click on the 270 bid to sell that strike, right? And then I'm going to buy the 272, but I'm going to control click on the ask for that one. And now we're seeing a 61-cent credit on this one, right? So I can see now why, when I just quickly looked at this trade earlier today, that I wasn't getting the same numbers. I was in the wrong weeklies. I was in the monthlies for that one, right? So maybe I don't have an alternative for you today. So here we are. We're looking at a 61-cent credit. Remember, we go into every trade knowing what our max profit and what our max loss is. So, but before we do that, then, of course, we're going to go into the risk analysis mode. We'll go over to this risk profile and make sure that we are set to the proper expiration of the 28th, 29th, right? I set it to the Friday rather than the Saturday. That's up to you. And then I'm going to set our slices to break even and choose the turquoise, which is expiration. I want to know what our probabilities are at expiration here. So in this case here, we're looking at a 72. Let's round that up to a 73% probability of breaking even or better. Let's call that probability of profit, right? And we can see here that if QQQ goes down, and this is nice because we're going to be adding some bearish delta, some negative delta. We have a positive delta portfolio, and with the pre-market looking down in most of these futures here, S&P, NASDAQ is looking down, you know, the Dow is down barely, Russell's down also even less. So my dog doesn't like that. He's groaning about the market being down, especially when you have this much bullish delta. Right, it's not a lot, but still. All right. Anyway, we're gonna take that down. We're gonna neutralize that a little bit today, so that'll be nice. All right, back to this analysis mode here. We can try, and this is where I was going to go when I was looking at the monthlies. If we're looking at a gap down a little bit in the Qs, might not be able to collect this 61-cent credit, right? And remember that 65 is sort of that sweet spot, that 1/3 the width. So you can move these strikes down by $1 and see what we get. We can do the 269, the 271, and there you go. And now you're looking at a slightly larger credit and a very minor difference in probabilities on that one. So it's up to you, if you want to adjust strikes or if you need to adjust strikes when the market opens, if you have that opportunity. So I think I'm going to tweak this a little bit and just double check here on the open interest in these strikes. So 269 versus the 270. There's a big difference in the amount of open interest between these two, but not between these two, right? So we were at 270 goes to the 269, 272 goes to the 271. All right, yeah, so I'm okay with this one. I'm going to adjust our strikes down $1. And I'm going to right-click this trade, choose Confirm and Send to review our max profit of $66, our max loss of $134, and the probability of, let's call it 72%. We know the P50 is closer to 80% of us taking off the trade when it gets to about $33 for me, and this with my strikes. I'm going to hit send. That's going to put it over into my working orders, and ideally that will fill and we'll see this delta come down a little bit here. So that means, we're more delta neutral. And that's because I'm beta weighted to the SPYs. So if you're wondering why your deltas are off, you've got a similar portfolio, I have beta weighting on, and that's just dandy. All right, everybody. So if you've made it this far, I really think it would be awesome if you would consider hitting that like button. And if you want to do this with us regularly, hit that subscribe button and ring the bell. You'll get notified inside of YouTube with when our videos come out. And I hope you got something out of this. I hope you're building your portfolio. I'd love to know how you're doing. Leave me a comment below. If you've made it this far, you might be the kind of person that would leave me a comment. How are you doing in your portfolio? Are you up? Are you down? I'm down. I don't hide it. There it is, right? But we are plugging away, and we are staying true to being mechanical. All right, everybody, it's been a fun week. I look forward to seeing you next week when we do our portfolio recap, see how we've been doing, looking at the trades we've closed. Yeah, that's that. So I look forward to seeing you in next week's videos.